1:30 p.m. here in Lagos, Nigeria's financial capital. Welcome to the program. This is Business Incorporated. We're live to you from our global headquarters here. I'm boosting them off. Let's spend the next 30 minutes together. And the top story today, the Organization of Petroleum Exporting Countries, known as OPEC, begin its meeting in Vienna, the Austrian capital. Iran and Saudi Arabia, two oil-producing giants, are expected to keep their acrimony at the meeting. Meanwhile, oil futures trade flat as market awaits decisions from Austria, the OPEC that is. Plus, a team from the International Monetary Fund visits Angola to negotiate a loan facility after lower oil prices hit the finances of Africa's now first exporter. Let's start from the OPEC meeting, where the member states are currently meeting as we speak today. But mounting tensions between the 13 members of the producing group and the different economic needs of each country are expected to play out any deal on output which could support current oil prices around $50 a barrel. OPEC is not expected to cut or freeze oil production levels at the meeting today. Ideas that failed to find unanimous support at this last acrimonious meeting in Doha, that was in April. Hopes of a deal were dashed after Iran, an OPEC member that is trying to revive its oil industry after years of economic sanctions, refused outright to consider a freeze on output. Iran's break on the deal angered OPEC's de facto leader, Saudi Arabia, and further damaged relations between the Middle Eastern rivals. But there were talks this week that Saudi Arabia could be trying to revive formal output targets, with Iran's oil minister rejecting the idea yet again. Now look at the market, where prices were steady today on mixed market signals ahead of the meeting in Vienna, which analysts say was not expected to result in restrictions on output ceiling. International Brent crude oil futures were trading $49.77 per barrel in early trade. That's up about 5 cents from the last settlement, while the U.S. West Texas Intermediate, or WTI, was down 9 cents at $48.92 a barrel. Despite rising output by OPEC's Middle Eastern producers, the group's overall production has remained largely flat this year, currently standing at 32.5 million barrels per day, capped by disruptions especially in Nigeria's Niger Delta, Libya, and troubled Venezuela. Now let's get into the markets. The London Stock Exchange Group said his forthcoming merger with Deutsche Börse in Germany could lead to job losses as many as 1,250. The tie-up, announced in March, is expected to be completed by the end of 2016 or early next year. That will create one of the world's largest exchange companies with a combined value of about 21 billion British pounds. Each of the two companies or exchanges has more than 5,000 staffers. The London Stock Exchange Group says its shareholders will be asked to approve the merger on the 4th of July. And that's the American Independence Day. By the way, the LSE added that the deal was expected to produce 250 million euros in annual cost savings in 5 years, with 160 million euros of those savings achieved in the third year of the merger. Okay, let's take in Europe, where we'll cross over to the Frankfurt Stock Exchange, where the man known as the market man, the Frankfurt Stock Exchange, DWTV financial correspondent for Channels Television, standing by, Olaf Krieger. Today, the meeting with OPEC, the ECB, in the news. Olaf, the market man, it's good seeing you here live and direct, not just only on Twitter. Thank you, Olaf. Good afternoon. The OPEC meeting is the top story today. Nothing else to talk about. What's likely coming up? What will be new at this meeting? Any expectations?
Well, two big things happened in Vienna today. Let's start with the OPEC, of course, and I honestly do not think, though, that they will be successful with their meeting, and many analysts say the problem still is that they still have not find common ground to reduce or even freeze the production in order to bring the price up again. And we have to keep in mind there's a new kid on the block. It's Iran. Since the sanctions have been lifted, Iran is back in the game, and that means more oversupply for the international market. So, in other words, we better not expect too much from today's meeting, today's OPEC meeting in Vienna.
Yes, investors are head-scratching over OPEC. All at the same time, still looking at the ECB countries around the world need to watch Mario Draghi today and the rest of his governing council, those who will take decisions on interest rates. And those decisions are coming through as we speak. The ECB has decided to keep rates unchanged and continue with its asset buying program. Nothing has changed, Olaf. So where do we go from here?
Well, everything stays the same. That's the decision of ECB President Mario Draghi. So he will leave the interest rates unchanged. And now it's going very interesting because as we speak, he's holding a press conference in Vienna, and investors and traders hope for some signals in which condition the different economies in the Eurozones are, especially, of course, the euro. And they want him to announce something like, well, I will keep the doors widely open to get more stimulus, to get more money for the markets, and even more money, more stimulus for the different economy, because Greece and France are still in hot water. So his goal is, of course, to bring the Eurozone back on track. And yeah, we have to wait what he is going to announce on this press conference right now.
Yes, Olaf, on a final note, thousands of jobs on both sides of the European corporate wedlock between the London Stock Exchange and the Deutsche Bank. Should investors and governments in the two countries worry about this merger and these hundreds of jobs that are likely to be shaved off these two exchanges when they combine the business in this year, perhaps as early 2017?
Well, yes and no. There's a big concern that thousands of employees will lose their job, and if a merger this big is going to happen, surely this will not without any consequences for the employees. But on the other hand, if a new market is created in this way, there surely can create some new jobs in this new stock markets going to happen with London and with Frankfurt. But, and there is another big but, Brexit could ruin all those plans very quickly. So everyone is on the sideline and is waiting what the Brits are going to decide, stay in or stay out.
You are standing by as well to watch. Perhaps Brexit will spoil this corporate wedlock before they get to the pulpit and sign the dotted lines. Thank you. Let's keep our eyes on the markets there. Thanks for standing in there for us. As always, Olaf and the rest of your team from GWTV in Frankfurt. Do have a great day in Europe. Okay, let's talk about the ASEAN conference. Government leaders, ministers, and business executives are tackling the big challenges facing the Association of Southeastern Asian Nations, or ASEAN, at the World Economic Forum ASEAN edition in Kuala Lumpur, the capital of Malaysia. The forum, which as several ASEAN countries are seeing slower economic growth than targeted and widening gaps between the rich and the poor.
We know what we are. And we know where we can be. The question now is, will we take the necessary steps to reach that goal? Do we have the will? Do we have the determination to make that dream a reality?
I think the challenge for each of our countries, and then therefore ASEAN, is really how to restructure our economies and find new sources of growth, because we are in this secular stagnation of the global economy. And if we need to increase our productivity, we need to diversify our economies.
I would just hope that we could move the talk a little bit closer to the action. Because I'm afraid ASEAN is losing out in the digital opportunities.
Okay, so Africa's currently largest oil exporter, Angola, Nigeria's closest neighbor to the south, is borrowing money from the IMF. So why, with all the oil money, why is Angola in need of support from the IMF? That's coming after the break. Stick around.